Welcome to this video. In this video I'm going to be making a stock analysis of Realty Income Corporation. If you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice. This is purely for entertainment and educational purposes. Now, if you don't know what Realty Income Corporation is, that is what's called a REIT, which is a real estate investment trust. It's a company that buys properties and then gives great dividends. So of course, it's a stock like every other stock, but these focus on properties themselves, and most often they pay out great dividends. Now, as you have probably noticed, they pay out a lot of dividends down here. They pay out dividends every single month. Now, I do love them a lot. It is by far my favorite dividend company, and the reason for that is if you live in a country or a state that has great tax benefits for dividends, you can actually gain more money from just buying a company like this that pays out dividends each month. Let's say you own a property and it was the rent from that. So that is something you need to, of course, do the math on yourself. But as you can see down here, they pay out 5.5% dividends a year. This is very nice. And if, let's say, you want to buy a property, you can actually just buy this instead, because if you want to buy a property, you need a mortgage. But this one is quite cheap at 57, of course. Now, something you need to note about a company is like this is its stock price fluctuates quite a lot, but it's in like the same area. As you can see, this has peaks up in 75, which was back in the later period of COVID, and then it goes down a bit again, about 45, and then increases. But overall, as you can see, it trades within the same area most of the time. So this isn't going to be the stock you buy today and it's going to be worth 1,000 in a year. Now, if you take an even broader perspective at the stock, as you can see, of course, the stock increases in price over time. But as you can see, in 2014, it was worth 37 bucks, and now it is only 20 bucks up from that point. So the thing you want to do about this is dividends. Dividends is the only thing you should worry about in this stock. That is at least my personal opinion. And as you can see in the beta in this stock, it is very low. I have never seen a lower beta, and this means the stock is very little volatile. Now, the beta of 1 is the average index, which means this is 13% as volatile as the average index, which is of course crazy. Now, PE on this stock like this is 56, which is quite normal, and on a REIT, which is I find quite nice. And as you can see here again, dividend yield 5.58%, which is absolutely crazy. The earnings in this are quite poor recently, which I do think is because of the rent in the United States are quite high. So of course that is something that is quite worrying, but hopefully we're going to see that being lowered soon, which of course is also going to lift the stock price. So personally, I've just bought a ton of this. I bought around 200,000 bucks, because that will then give me about $1,000 each month in in dividends each month. And I figured I want to try that instead of buying a property to see which one I prefer the best. Now, if you go down here, as you can see, the annual income that has exploded over the recent years, and the reason for that is they have gone a lot into retail. As you can see right here, they have really increased that quite a lot, which is nice to see. And that is something like 7-Eleven and stores like that, and so on and so forth. But as you can see, they are in basically every single industry of business, which is quite nice to see. And they're also quite huge in dollar stores as well, which of course nice to see. Health and fitness, restaurant, quick service. This is something like McDonald's and so on and so forth. And as you can see, they are both in UK and US. Now you can see down here they are primarily in the United States, but they are also in the United Kingdom. They are gaining quite a large presence, and also in Europe and some places in Asia they are also looking at, which is quite nice to see. Now we go down here to the seasonals. It is not going to be that impressive. As you can see here, let's just go take from 2010. As you can see, overall it isn't that impressive, but up here, as you can see, great dividends means great results year over year. So the longer you have this, the better it is, to be honest. Now the technicals on this, as you can see right down here, for 1 day it's a buy, and for 1 month it is still a buy. And as you can see, that is also because we've actually had quite a nice rise recently, and we are currently laying on a previous support level, which is of course great to see. Now, the analyst reading of this are quite amazing. 6 strong buying and 17 hold. Overall, I don't really think you should take that into consideration with the stock price after a 1 year forecast like right here, because you shouldn't buy this with 1 year in mind. You should buy this with 50 years in mind. I really think that is the way to look at this stock. Now, annually, as you can see here, they are increasing it slowly more and more, which of course love to see in their EPS, and it's the absolute same here with revenue, just increasing it more and more, which is lovely to see. And the thing I love about this is how old they are. As you can see right up here, as you can see, it was formed in 1969. So this is one of those huge companies, which means volume means a shit ton, which is nice to see, because make bigger volume, the more leverage they can have with the banks where they take their loans. So overall, just an amazing company. That is at least my opinion. If you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice. This is purely for entertainment and education. But if you want to see more videos like this, please leave the company to analyze in the comment section below.